The stock market is where investors connect to buy and sell investments, most commonly, stocks, which are shares of ownership in a public company. Stock market definition. The stock market is where investors buy and sell shares of companies. It's a set of exchanges where companies issue shares and other securities for trading. It also includes over-the-counter, OTC, marketplaces where investors trade securities directly with each other, rather than through an exchange. The stock market explained. In practice, the term stock market often refers to one of the major stock market indexes, such as the Dow Jones Industrial Average or the S&P 500. These represent large sections of the stock market. Because it's hard to track every single company, the performance of the indexes is viewed as representative of the entire market. You might see a news headline that says the stock market has moved lower or that the stock market has closed up or down for the day. This often means stock market indexes have moved up or down, and stocks within the index have gained or lost value. Investors who buy and sell stocks hope to profit through this movement in stock prices. How the market works. When you purchase a public company's stock, you're buying a small piece of that company. The stock market works through a network of exchanges. You may have heard of the New York Stock Exchange or the Nasdaq. Companies list shares of their stock on an exchange through a process called an initial public offering, or IPO. Investors purchase those shares, which allows the company to raise money to grow its business. Investors can then buy and sell these stocks among themselves. Buyers offer a bid, or the highest amount they are willing to pay, usually lower than the amount sellers ask for in exchange. This difference is called the bid-ask spread. For a trade to occur, a buyer needs to increase his price, or a seller needs to decrease hers. Computer algorithms generally do most price-setting calculations. You'll see the bid-ask and bid-ask spread on your broker's website when buying stock. In many cases, the difference will be pennies and not much concern for beginner and long-term investors. The U.S. Securities and Exchange Commission regulates the stock market, and the SEC's mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Historically, stock trades likely took place in a physical marketplace. These days, the stock market works electronically through online stockbrokers. Each trade happens on a stock-by-stock basis, but overall stock prices often move in tandem because of news, political events, economic reports and other factors.